Good morning and thanks so much for tuning in. Happy Monday to you. You're tuned in to BQ Prime and this is Trade Talk. My name is Alex Mathew. Let's take you through everything that you need to bear in mind from a stock-specific point of view as we get ready for the start of trade today. And if we talk about the context, you've seen the Nifty 50 that dropped about 1% or so all of last week. And it was under pressure towards the end of this week as well. It closed above that 19,500 mark, and most sectors lost ground. You saw the losses that were led by the realty index, which dropped over 2% in the week. Nifty Metal, FMCG, as well as Nifty Bank and IT dropped over 1% as well. Most indices currently displaying consolidation. Now, as we talk about the key factors to bear in mind, earnings, geopolitics, at the start of this week as well, they remain the top talking points. In the Gaza region, you have Israel as of now that has held off on a ground invasion as diplomacy has once again taken center stage, with the US trying to influence Israel to take that route to get its hostages back. So that is something that you will want to watch out for in terms of the key triggers, as well as bond yields, which, as you know, over the last week have been elevated in the US, and that has had a bearing on risk assets across the board. This morning as well, you have Asian markets that have opened just a bit weak, with the three early risers first a while back that had opened all with cuts. But let's focus in on the key triggers to bear in mind as we start the new trading week. Of course, it's going to be a bit of a curtailed week with a market holiday tomorrow, but the key F&O triggers to watch out for. Agam's joining in to give you just that. Morning, Agam. What are the key levels?
Good morning, Alex. So what we saw last week was a little bit of a rise, and then eventually we saw the markets come off. There's a lot of uncertainty, and there aren't as many positions being built as far as the futures and options space is concerned. For now, it is, of course, also the monthly expiry which will come in. On account of that, we are looking at rollovers of around 25% for the Nifty and 27% for the Bank Nifty, respectively. We're not seeing too much in terms of addition in open interest as far as the Nifty futures go, but Bank Nifty futures across all series have seen a decline of as much as 7%. So rollovers are more uncertain as far as the Bank Nifty is concerned. What are levels we are watching out for? For now, Nifty around the 19,500, 19,600 level, and we're keeping an eye on exactly that. There is a substantial amount of resistance, considerable amount of maximum open interest being built around 19,600 calls as well. As far as the Bank Nifty is concerned, it is essentially 44,500 on the higher end and 43,500 on the lower end. That's a 1,000-point range we're expecting the Bank Nifty to be in as far as this week is concerned. But Alex, as you said, the fact that we have a holiday tomorrow and there's a lot of uncertainty across the globe, and of course a lot of earnings, a lot will depend on earnings, which is why at the moment we have traders who are just a bit hesitant to take substantially big positions in the market.
Absolutely. Thanks so much, Agam, for bringing us those updates. And as Agam was pointing out, earnings is going to be a key watchable. And over the course of the weekend, one of my colleagues had a very, very busy Saturday, and his team as well. I'm talking about the banking editor, Vishwanath Nair, is joining in. And Vishy, earnings, of course, center stage. Kotak Mahindra Bank is, I think, the stock that we're starting with, but not because of earnings, but because of the management change, Ashok Vaswani to take over.
Yeah, so completely out of left field announcement that came in. What was said was that Ashok Vaswani, who's a multinational banker, has received now Reserve Bank of India approval to take over as the MD and CEO. Now, he's supposed to join no later than 1st of January. So at some point in December, he's going to take over as the CEO. But there is, of course, something that we need to watch out for, which is the role of Uday Kotak in the bank's board. He's going to be a director. That's something that the shareholders of the bank have already approved. Ashok Vaswani comes in at a time when the bank itself is going through a bit of a transformation because Uday Kotak, being the founder, MD and CEO, left in September. Since then, there has been a bit of uncertainty as to who exactly is going to take over as the MD and CEO at the bank. So now that is somewhat clarified. We still need to see what Ashok Vaswani brings into the table, because looking at his career, he's mostly focused on retail, on digital banking. Those have been his strong points. What he brings to Kotak Mahindra Bank, that's something that we will closely watch out for, Alex.
Interesting. And I believe that he's going to be joining as interim or rather a part-time before he takes charge fully?
So he's currently working in the US at Pagaya Technologies. So he has to complete that assignment before he comes in here. So he's going to come in here in December. We do know that Deepak Gupta, for example, the interim CEO, he has to step down on the 31st of December. That's when his tenure ends. Now, his interim CEO role itself ends on the 1st of November. So the bank has said that they're going to seek RBI approval to extend that tenure. So that's something that we need to watch out for.
Fantastic. Let's also talk about the earnings because I think, so two major private sector banks at least, and there are a number of others, but ICICI Bank as well as Kotak. Are there similarities that you saw in Kotak? What are the key numbers that stood out to you?
So similarity wise, well, apart from the fact that both have seen strong loan growth, there's nothing really that's similar. For Kotak specifically, now the numbers that we have to look out for are net interest income as well as the net profit growth. Both have grown about 24%. And that's largely because the bank has been able to maintain the increase in loan growth and the increase in deposit growth very well during this quarter. And that's also reflecting in the NIM. The net interest margin has dipped by only 5 basis points. And that was a bit surprising for a lot of analysts because CASA has been a strong point for Kotak. And the expectation is that during the high interest rate regime, you will see CASA sort of coming down. But the bank has introduced this new sweep-in facility, which helps them move the deposits into fixed deposits. So net, there is not that much of an impact despite the rise in the cost of deposits. The other point that does change for Kotak Mahindra Bank is the fact that credit costs have been lower during the quarter. That has cushioned the fall in NIM during this quarter. Strong loan growth and strong deposit growth. Mixed results is what some of the analysts are pointing out. In fact, Jefferies has turned their assessment on the Kotak stock to hold from buy earlier, and that's an important move. But majority of the analysts seem to be okay with whatever has happened. The transition into the new CEO role, that's going to be a key monitor.
All right, let's see how that stock reacts. Vishy, thanks so much for bringing us those updates. Let's also focus on the other financial names, and let's in fact start with a conversation about ICICI Bank. In fact, this bank reporting its Q2 results as well, and NIMs in focus for this particular bank because there was a 25 basis point decline on a sequential basis in the net interest margin. Pragati is joining in to give us a perspective as to why that happened. Morning, Pragati.
Morning, Alex. As you said, ICICI Bank did report a good set of numbers. The net profit was up 36% year on year, and it largely met the street estimates as well. The asset quality also improved, and other metrics like the net interest income, other income, and loan growth were also strong. However, if we have to point out two things to watch out for, it would definitely be NIMs, as they compressed 25 basis points quarter on quarter due to repricing of deposits. The management did say that the NIM compression will moderate in the coming quarters and it will be able to maintain it at FY23 levels. However, other thing that we need to watch out for is the recoveries and upgrades, which were marginally lower, and the management explained that this was due to the seasonally weak quarter for the rural banking portfolio. Overall, if we see, it's a good set of numbers, Alex. Morgan Stanley has also maintained an overweight rating with the target price of 1350.
Absolutely, and that PAT number is significantly higher than the consensus estimates. Let's also talk about a few other financial names. You have the likes of Paytm, you have the likes of IDBI Bank, and a whole host of other smaller private sector banks as well, RBL as well as YesBank. We've got Himanshu also joining in. Why don't you guys give us the lowdown as to what is the big takeaway from the weekend?
Sure, Alex. I'll start with YesBank, I believe. The numbers were a mixed bag largely. Profit did rise but missed street estimates as it also rose on other income. Three things I would like to point out here that we must take a look at, and even analysts have been talking about it. One, the net interest income was down 3% year on year, and the management said that it was due to the repricing of deposits and a stable CASA ratio. Second, the NIMs were down 20 basis points, and NIMs going down have been a trend across across the banking sector, and everyone's been talking about it. Third, the unsecured loans. The size of delinquencies are on an increasing trend, and the management did point that out. There are concerns, but not in a significant way. Himansh, why don't you tell us about the other banks?
Right. So amongst the other banks, IDBI Bank for one reported a 60% increase in its net profits, which towered over 1,300 crores this time, and this was mainly on the back of provisions. However, a key disappointment this time was a 147 basis points drop in its net interest margin on a sequential basis, as cost of deposits and cost of funds, like you mentioned, rose by about 10 basis points. Now, coming on to RBL Bank, which is going to be very interesting because as profits jumped close to 50%, although provisions, surged over 2.6 times. Now, their profits of 294 crores was in line with most estimates, but the marked increase in provisioning was something that the street wasn't prepared for. So this was mainly due to the creation of contingent provisions in the bank's microfinance and credit card segments, which amounted to about 252 crores, and the change in the credit card provisioning policy, where they're now performing, full provisions for 120 days instead of the previous 180 days. So this resulted in about 48 crores of additional provisions. And then lastly, the bank also received a tax back provision write back of about 222 crores. And another key change was in the terms of classification of business correspondent charges. Previously, while they were charged to the net interest income, they are now being added back to the operating expenses. So on a net-to-net basis, there's no impact on the profits as such, but net interest margin and net income were the key changes this quarter. But Pragati, what have you observed and picked up from the NBFC space?
Well, before we move on to that, there was another key financial, that was the Paytm. It reported some good numbers and the street largely looked happy with the numbers. The revenue from operations was up 8% sequentially and 32% year on year. The loss also narrowed about 49% year on year. The growth journey of Paytm continues, but this time the main highlight here is that it's on the back of an increase in merchant subscription revenue and the growth in loans that are being given out. So definitely some good set of numbers. Jeffries couple of days back, Himan, said that the Paytm is entering a league of large profitable fintechs, especially with the ramp up of the credit business. So very interesting things happening there. If you look at some latest brokerage notes, Bernstein maintains a target price of 1100, which is 11% upside to the current market price. However, we must note that it's still far behind from the IPO price of 2150 per share. So we will wait and watch how things progress. Why don't you tell me about the other financials, Himanshu?
Well, you spoke about the increase in retailization and disbursements. That reminds me of L&T Finance, which posted a profit growth of 46% on year. And this was on the back of rural and microfinance loans. Now, they reported the highest retail disbursement so far, which was about 13,000 odd crores. And the retail chunk now contributes to 88% of its overall mix, which was also ahead of its 80% goal, which is the Lakshya 2026 goal. From a margins perspective, net interest margins moved up by 2.41 percentage points to 10.84%. And then we also had Poonawalla FinCorp, where the profit jumped on the sale of its subsidiary, Poonawalla Housing Finance, over 9 times, in fact. Excluding the impact of the subsidiary, the profits still showed a robust growth of 77% at 230 crores. The company created a one-time provision about 1,300 crores for its discontinued portfolio. And notably, the lender crossed the 20,000 AUM mark. And also, in terms of disbursements here, they showed a 2.5 times jump over the past year. So overall, great set of numbers reported by the financial pack, and let's see how the stocks react in trade today.
Certainly. Thank you so much to the both of you for giving us that perspective. All right. Now, earnings, apart from the banking and financial space also, is clearly the key monitorable at the start of the trading week. We've got my colleague Varsha joining in. She had as many as 12 stocks on her list, and I had to ask her to curtail. Varsha, you have to tell me what you've added, and also I have to point out, in case you would like to know about the other stocks that she doesn't mention today, do check out the website bqprime.com. We've got a very consolidated list of stocks that you would want to watch out for. It's under the headline, All You Need to Know. So do check that out. Varsha, what's on your list today?
Good morning, Alex. So
Morning.
let's start with JSW Energy. So the revenue from operation rose almost 36% to 3,200 crore on account of incremental revenue from renewable portfolio and strong thermal performance on the back of optimistic merchant market. The EBITDA more than doubled to rupees 1,888 crore, led by robust contribution from acquired renewable assets, short-term thermal sales, and turning up impact of hydro assets. Then operating margin was 57% as compared with 37% a year ago on account of higher realization on per unit of power sale, and profit nearly doubles on higher operating income and margins. Then we have Amber Enterprises, which is into room air conditioner industries, where revenues were up 23%, while EBITDA was up 62% at 59 crore. Now, if you see the margin, there was uptick in margin due to the cost of raw material, which was 76% of revenue versus 81% a year earlier. Net loss was at rupees 6 crore versus 3 crore last year due to increase in finance cost and depreciation cost by 50% and 42% respectively. Now, let's see what's happening with this renewable energy company, Sterling and Wilson Renewable Energies, whose total income rose 2.42x at rupees 776 crore, while its consolidated net loss narrowed to 54 crore in this quarter due to higher income. It had clocked a net loss of 298 crore during the September 2022 quarter. Now, we all know what is happening with agrochemical companies. So there's dumping by China, which is affecting the prices of final products, which we can see in this company called Sharda Cropchem's results, where the revenue has degrown due to lower product price realization across Europe and other regions. Also, this has led to stock revaluation as per accounting policy and has impacted the gross profit and profitability to the tune of 13 crores. Then lastly, we have Lloyd's Engineering Works, where we saw revenue growth of 8% at rupees 122 crore. EBITDA was up 64% at 24 crore. Now, if you see the margins were at 19% versus 12% last year. Now, the interesting point is the order book as of 30th September 2023 stood at 921 crore. Now, the order book for the company has grown over 100%, that's almost doubled, with 202 crore of fresh orders in Q2 FY24. Now, order book as of date is 3x of FY23 sales. Also, the company remains debt free.
Okay. All right. So just so you know, the brief was to find out the stocks in the list that are likely to see price action on the back of earnings. And so that, according to Varsha, is the list that you have to watch out for. Varsha, we'll have to see if that actually pans out. Thanks so much for bringing us all of those details. Now, apart from earnings, which we focused most of this show on, we've got a number of other updates based on what companies have sent to the stock exchanges, and there are a few updates with regard to M&A activity as well. We've got Mihika joining in to give you some perspective on which other stocks could be in focus. Morning, Mihika.
Morning. So first we have Adani Energy Solutions. It received a smart meter LOAs worth 17,000 crores, which added 219 circuit kilometers to the operational network. The units sold this quarter was 9.53% up on a year-on-year basis at 2,446 million units. According to the provisional operational updates posted by the company, the consumer-wise revenue mix was up 1% in both residential and commercial at 46 and 43% respectively, and the industrial breakup was down 1% to 12%, and the collection efficiencies this quarter was 100.76% versus 102.21% a year ago. Then we have Zydus Life Sciences. They received the US FDA approval for the ANDA of sitagliptin tablets, which are used to treat adult patients with type 2 diabetes mellitus, and IQVIA estimates the US market for DPV IV inhibitors and their combinations to be $10 billion. Then we have Power Grid. The company has approved an investment of 119.95 crores in its Eastern Region Expansion Scheme, and it is estimated to be completed within 24 months from the date of approval. Then we have Tata Power Renewable Energies. The company has signed a 12.5 megawatt power delivery agreement with Supreme Petrochem in Archangaon, which is in Maharashtra. They plan to generate 27.5 million units of renewable power annually and reduce the carbon emissions by 20,075 metric tons annually. Then we have Samvardhana Motherson. Its unit has decided to buy 100% stake in France Topco for a sale consideration of 35 million euros. Topco basically manufactures components for aircraft engines and medical services. The company is also entered into two other acquisitions. It's going to buy 73.05% stake in Irlik Private for 46.6 crores and 100% stake in Samvardhana Motherson Addis Tech from Motherson Auto for rupees 21.9 crores. And then we have Sheela Foam, which has completed the acquisition of 94.66% of the share capital of Coolon Enterprise for an aggregate consideration of 2,035 crores.
All right. Thanks so much, Mika, for bringing us those updates. Now, we've had a long list of stocks that we've discussed today, and we've had a focus very clearly on the banking and financial space. We want to watch out for that space very closely as we start trade in just a few minutes. In the meanwhile, stay tuned to BQ Prime.